Good afternoon, everyone. I noticed that the moment we mentioned about KYC, half of you left. So for the rest who stayed, I assure you this is a good one, a special one. You're going to bring, if anything, not bring out, there will be some really, really good expertise, words of wisdom from those smart experts. So without further ado, maybe I'll invite my panelists to introduce themselves first. Steven, you want to start?
Go in order. My name is Steve Gitlin. I'm the Global Head of KYC Advisory for Morgan Stanley.
My name is Mike Milik. I'm the Head of KYC Advisory for Natixis, which for the 98% of you out there who don't know, it's a French-owned bank.
My name is Krishna Nair, Head of the AML and the Core Compliance Technology at MUFG.
Hello, everyone. I'm Stacey Jafta, Head of Growth at Cybrin. We're an end-to-end KYC solution.
Thank you, panels. So I'm supposed to remind everyone to use Umbrella for Q&A. However, because I really want you to keep your eyes on us. So I'll invite everyone to do the Q&A just by raising your hands at the end of the session, though. So without further ado, let's get started. Oh, actually, yeah, before we officially start, I do want to do a poll. Again, raise your hands. I know most of the people here are related to financial crime and have been gone through tons of the KYC transformations, or maybe never, then you will be lucky. I just kind of get a sense of how many of you have gone through one KYC transformation in your own firm or related? 1, 2, that's a good 10-15%. How about those who is more than one or even more than two? Oh, wow, I have to ask, where are you from? So which company are you working for?
So I used to, my background as a consultant.
Oh, that's your client. That makes all the sense. And I'm sure you can share with us a lot later on in the Q&A as well. So back to my panels. So looks like most of our audience have gone through some of the transformation and challenges, so it's pretty real. I think the fact that half of the audience left when they hear KYC already says enough. So maybe you can share some of yours. What has been some battle, challenge that's even actually especially unique enough that in your firm or what you heard of, especially to balance that business priority and compliance rigor?
Sure, I'll start. Working for a French-based bank, right? We're the U.S. branch of a French-based bank. We all face the challenges with our front offices, right? That we do too much for KYC. Everybody experiences that. And working for a French financial institution, we must adhere to both EU and U.S. regulations. So that's one of the challenges we face. And what we've been able to do is we've established some roundtables with our European-based bank peers. And we do some benchmarking and some, because our home office will occasionally be a little bit more conservative than we feel needs to be here in the U.S. So we do some benchmarking with our French peers to see, like, well, what are you guys doing, right? Because we always want to run with the pack. We don't want to be a pioneer and doing more. We don't want to be a laggard and not doing enough. You always kind of want to run with the pack. So that's one of the things we've been able to do, and we've been able to get some pullbacks from our home office where we've reduced requirements a little bit, or we've made them a little bit more flexible for our front office. So it's kind of a little bit of a win-win in that scenario.
Thank you. Steve?
Yeah, so certainly I'm sure a lot of people that came from a bank or a broker-dealer or an international firm can probably relate to that. I think some of the challenges that I've sort of, I would say, observed to be recurring, they're not unique to any one firm, but one that everyone deals with is the global nature of the space, the constant evolution of regulation, the changes that are from a client view are perceived as often a burden because it's so heavily integrated into the account opening and the relationship management aspect of the process. And so the real kind of delicate balance in the KYC world that may not be experienced in many other areas is that you're ultimately attempting to service the client at the same time as attempting to satisfy your KYC requirements. And so the perfect sort of balance of doing that in a way that is seamless and striking the most friendly client experience and most seamless client experience is where you want to be, of course, with strict controls and adhering to your regs. But that has been, I think, the number one most prevailing challenge, and that is the core challenge of what KYC implementation execution is in my mind.
Stephen touched on a good point about regulatory changes, and I think another challenge is keeping up with that financially, also having resources on a project, having to pull them off of a project to just change what your KYC process currently looks like. That is a massive challenge. And what we found is being able to rather predict what the trends are, what patterns you're seeing. For example, Sabrina, we're founded in Africa, and what we've seen is in Nigeria, they're really forward-thinking with how they go about fraud prevention. So earlier this year, they launched a new regulation where for onboarding, you have to do social media checks. I'm sure everyone in America is like, yeah, that's not going to happen here. But what we've seen is that when Nigeria launches a new regulation, the rest of Africa follows. So building your solutions according to the patterns you see, I'd say that's a really great way to combat that.
Yeah. Some of the challenge what I see is normally how do we balance between a relationship manager's eagerness to generate the revenue versus the bad boys standing between them and their goal. Like, the solution is to how do we implement the technology to leverage, like, do once, leverage many times. That's the place where I come help them to resolve the issues.
Well, I think all of you hit the point that the struggle is definitely there, but there have been quite a bit of silver lining, but depends on which particular part of what your clientele looks like. So that's really good to share, but it sounds like you all have identified some win-win strategy for your own space as well. So maybe the next question, because we talked a lot about the ecosystem today, and the KYC has its own ecosystem as well, even though probably no one thinks it's really green enough, because we all talk about efficiency and the front upon that. So what do you think is the biggest gap in the KYC ecosystem so far? And what you want or you wish can be done for those gaps? Anyone?
I'm certainly happy to start. So, there's so much aspects to KYC that has evolved over time, largely because availability of data and technology. That has been both a positive and a negative because you have so much more information available out there that you can now source. You can bring that information into your process. KYC, as we all know, is very data heavy. It's very rule based. And it's also very costly, right? There's a lot of resources, a lot of spend that's involved in this process. It's also at I would say the face of your AML program in a sense, right? And so the ecosystem has evolved in the sense that you're now able to tap into information that's commonly available in public sources, databases. Governments are becoming more kind of receptive or more kind of in tune with the availability of information, sharing of information. And then, of course, ingestion of that information into your technology. But as that process has evolved, at the same time, there are challenges like data privacy. There are challenges with identity sharing, hacking. People are more aware of these other risks that have emerged that really have become a bottleneck and a challenge in being able to adopt a lot of this. And so, coming from a firm that is sort of very keen to client service, as many financial institutions are. That has been, I would say, one of the bigger difficulties in, given the evolution of the KYC process, is being able to adopt that to your firm and to what your goals are and how you deliver your services to your clients.
I think one of the things we all kind of struggle with as well is incorporating the KYC process into all of your AML controls, your transaction monitoring, your financial intelligence units, all of those types of things, right? KYC, as Stephen mentioned, is a very data intense, often a very labor intensive process, and there's obviously no short of vendors out there that are trying to sell solutions. So you've got all this information, you've got all this technology out there. Being able to incorporate it into your business and then tie it into your larger KYC and AML program as a whole is, I think, one of the big disconnects, for lack of a better word, that we kind of see, tying it in with the whole program.
That is one thing. Like, I used to be a consultant with a Big Four. whenever we go to the meeting and we get an introduction, how old the company is, oh, we are 150 years old, I think. Should I go home right now? Good. The moment they say that, one of the challenges we face is, as Mike mentioned, is disconnected systems. And they have a multiple document management system, multiple onboarding system. None of them will talk and provide a very bad customer service, basically. Customers start coming, hey, I just give you this document to your UK office, or I give it to your private wealth management. Why I have to provide you this again? So that is the biggest challenge what we are currently facing with the KYC ecosystem. Non-existence of an integrated KYC system, right, that go across. So we can do like build once and leverage many times. So and also like we can do like an incremental KYC, right? Because somebody provided a document in the UK, then what is the delta we need to collect for the US or between the two different business divisions? So that is where we need to go to solve this issue.
I think when looking at the ecosystem, there's two folds. You think of internal organizations. They're even siloed with how they manage and process KYC of different departments that manage each process, and at times not even communicating with each other, having that duplicated. Then thinking of the big picture, global KYC, we're miles and miles away from achieving global KYC, which I personally would absolutely love to see. I do understand the challenges of different regulations, as well as just different ways of having to go through KYC depending on internet connectivity, the types of, I would say, IDs that they use in different regions as well. But to see us get closer to global KYC, I really, really hope we can do that.
Yeah, that's something we all struggle with, right? That idea of we're a global bank, but we don't act globally, right? Yeah. We're for most banks and most of the banks I've worked for, it's a very siloed approach to KYC and to AML in general, and we're all trying to globalize it, right, and make it more global, but it's definitely a very difficult task.
We need to take baby steps. Forget about global. My challenge is like within the same region, same country, each division has their own KYC process, basically. How we are going to do that one?
Oh, thank you. So we all hear that just basically being siloed, not well connected, both across within compliance, within AML, or across other functions. And I really like some of the points regarding we can even leverage those KYC data to make our revenue better, or maybe really know our customer more from not necessarily a compliance purpose, maybe from just cater better marketing products and all of those aspects. Like myself, I work for Citi, and we use KYC data to do a lot of analysis, and my favorite is always just watch how many new customers are getting onboarded, like for each of the season, and how many of them are high risk. So those are the things just I think can go beyond compliance itself to give hopefully, ultimately, board of directors some insights, knowing that we're not just a cost center.
Yeah, and you mentioned going beyond, AML, and Krishna mentioned it. It's the customer experience, right? How can we enhance the customer experience? If we have a customer that's operating out of 4 of our different regions, and they're all asking for the same KYC information at different times, you can improve the customer experience by globalizing your approach, and you do one outreach for all of your different regions, and now you've provided value to your front office above the compliance aspect of it.
Yeah, I also like that sometimes we as compliance officer may know better about customers than our relationship managers in certain ways. So hopefully, at least in my job, I was able to kind of just build that relationship through some of that add-on value, I guess. Stephen, what can
I just on the point that you mentioned and being able to leverage information that's sourced for other purposes within the firm. I mean, KYC, you look at your legal requirements, your tax requirements, your client account opening requirements, your credit requirements, and then you have KYC. And if you look across them, KYC often tends to dominate those in terms of volume of information, but there's also a lot of overlap. And I think that integration has not been perhaps something of focus to many firms in the past, because these are siloed functions that run in parallel. Sometimes they're part of an account opening process, but they're not necessarily leveraging information. So that's something that definitely is a big opportunity. I mean, something I've seen really improve our processes extensively by being able to source and leverage data across those different aspects of the process. It also, again, naturally, to the extent that there is vendor solutions or public sources that you can use to satisfy some of those requirements for other purposes, you should be able to leverage that for KYC as well. I mean, I think regulators actually do like that. They like to see consistency, even if it's outside of the KYC process. So.
Yeah, absolutely.
Yeah, I was just going to add that that's one of the things we've tried to do, and to be honest, have failed thus far. You know, if I think about our lending business in our branch, we're lending entities $100 million. We're lending them these massive sums of money. We must have so much KYC information from a credit side that we're still getting on a KYC AML side. But I'm like, they must know so much more than we do, right? Because we're lending them these vast sums of money. I'm hoping they know more than we do, you know, in terms of who we're dealing with and knowing our customer. And that's something that wherever I've worked, I've been unable to tap into that resource.
Thank you. This is sort of just kind of a spontaneous question, like, because we're all working for fairly large banks across different, so the same customer can be customer across different functions. Is it actually, that's also a question for the audience, how often are the customers connected across those departments? Joe Smith is our private client, is also our mortgage client. If he is not onboarded through, like, say, a Citi Gold platform, like just kind of when his wealth builds, he onboarded little by little. Is there like kind of connectivity over there for the KYC, or each department has their own KYC for Joe Smith?
I will take it that one first. If you look into the back-end perspective, there are a lot of connectivity, am I right? Because the people are building the data warehouses and everything. That is a secondary database. The challenge is, what about the front end, basically? If I don't know about the audience, is basically one of the biggest challenges. What I have observed is gathering the document from the customer is the longest process in the KYC process. Am I right? It's go back and forth.
It's all customer's fault.
So if we do not integrate that part, and if we integrate only the data elements, like, so most of the banks nowadays have a single entity ID and, like, all the products and everything connectivity. But that is not just enough for the KYC team, because the KYC team understand the documentation side of it, because that is what they do. So that is where I see the lack of integration happening.
I think the point about the single client view, I mean, this is another buzzword. I know we're going to talk about another topic later, but that has definitely, in the past decade, become a bigger focus from regulators, certainly of those that work for bank holding companies. You'll see that a lot more common. They'll look across your branches internationally. They'll look across your brokerage businesses as well. They want to see consistency in your understanding of the client relationship in one way, right? You're not looking at them as a wealth management client, institutional client, and a client for retail brokerage. You're looking at them as one client that does three different things as opposed to three different clients. So that's something that I think has definitely emerged as an expectation. There's challenges in executing this, especially with growing firms that acquire other firms, constant remediation work, and I think that's part of the problem is being able to establish a process that's adaptable, that you can integrate as your organization grows to products and acquisitions or any kind of potential mergers of business units as well. But historically that has been what remediations have basically come from, is that kind of being behind the curve on those types of integrations.
Totally. I know Stacy was talking about global KYC. Probably that's even more so in that space, since at least for a U.S. person, you have a system that to connect somehow secretly, but global KYC they do. So I just kind of put you on the spot.
I'll put you on the spot, Sabrina. So you're at Citi, right? I can be a Citi customer, and my business is very. We're a commercial investment bank, so we don't have some of those same challenges. So for a Citi, I could be a credit card customer, I could be a brokerage customer, I could be a banking customer, I can touch many different worlds. Are you guys able to, kind of combine my relationship and provide that understanding of my, the risks that I pose to Citi, throughout those different business lines?
I would say that there definitely significant progress made on that. And then, like you said, the single view of the client has been a perpetual topic in Citi, and it has been made a lot of progress. We have like enterprise-wide programs that just doing those horizontal analysis to do what we call risk alignment. So that's definitely in progress. And not only that, our goal, I guess for every bank as well, we're hoping that single client view is not just KYC view, it's also transaction investigation, active news, social media news, like all of that. So, but yes, I totally hear you. And it's, I wouldn't say we're fully there yet, but I'm sure all of us, maybe one day, like when the collaboration across banks can even be more closely knit, I think we can get even closer to that, because I can rely on your company's information or Morgan Stanley's information to complement our the single view of the client.
I think you made a great point. It's a massive challenge, even just sharing data between using institutions. Earlier, we were talking about this concept of self-sovereign identity, and this is where the user actually possesses the identity, and they're responsible for making sure that the changes are made. I think that's one of the ways we're going to move towards global KYC. It's having this one way of identifying who a user is, whether that's not just from an SSN, which that doesn't exist in other countries, but having one global way of how we're going to be presenting that, integrating that, and just making sure that the user is automatically updating that. I think that's the way of the future.
Yeah, I think in the evolutions in the regulations as well have actually, to echo your point, I think, certain regulators within the US, and, for those who are familiar with the Corporate Transparency Act and, the forthcoming changes in January, there has been progress made to have consistency in terms of expectations and reporting of information between governments. And so I think that type of standardization across just kind of global regulatory regimes will help with that quite a bit. It kind of, even perhaps will even itself out at least a little bit more than today, based on the fact that the standard will be consistent across the countries, as opposed to just the firm, arbitrarily deciding to do so. So
yeah, we need to go even beyond the AML KYC side of it, Emery. A single customer view is not just for the AML KYC purpose. Risk management, the global risk management, the local risk management. How do we know that? What is the total risk exposure to a particular entity? This has happened, basically, when the Lehman Brothers was going bankrupt. Many companies had a problem to understand, because within the Lehman Brothers, there are zillion SPVs and all those entities, the fund entities. How do we know that what is my exposure to this thing if I do not have a single view of customer?
So not just single view, but also aggregated view, like a holistic view across. That's a great point.
Yeah. I wanted to just say on your point on not understanding the genuine risk score, being able to share your data allows you to see, has this happened or occurred within another organization? And then I was reading the statistic on how fraudsters actually go to one country, do something where maybe it's money laundering, then go to a different country, do the same. But because we're not communicating, we have no way of actually seeing that come into play. But if we start, I'd say, communicating, working together, we can really combat this.
I believe so. So kind of back to audience, I think a lot of vendors today showed us they can do perpetual KYC. How many of you have experienced or at least heard of a good progress in one of the firms that, oh, really, wow, already completed the perpetual, or wow, in a way?
I think there's been progress made, not necessarily in the US, but in the UK.
Oh, that's a good point.
So Lloyds Bank, for example, Lloyds Bank, I think, were given an exception to enable to no longer need perpetual periodic reviews because of the ability to monitor in real time the changes in the risk profile of their customers, which you only get if you have good data, streaming sources, and so on, which a clever chain. That's something we're working on.
All right, we're going to check it out. That's good to know. Thank you for sharing.
It's something that we've tried to implement at my firm. We've actually amended our periodic review schedule. We're not at a perpetual KYC state, but we've enhanced some of our monitoring so that we're always looking, like if you think of a low-risk population, it's entities that are regulated or publicly traded in low-risk jurisdictions. And as long as we monitor that status and ensure that this entity is still regulated or still publicly traded, we moved out our periodic review schedule for low-risk customers because we now have the ability to monitor that. And as that continues to develop, that's something that I think, firms will be able to do. It's something that helps to lower your KYC costs, which we're always being pressured to do, without really increasing risk through, using these monitoring tools and things like that, moving out your periodic review cycles, things like that. When you mention perpetual KYC sometimes to a front office person, they're like, oh my God, I already have to deal with you once a year, now I have to deal with you perpetually. But no, it's actually, the idea to use technology to perform this level of ongoing KYC.
That's a very interesting. That reminds me, maybe instead of perpetual KYC, we should call it zero touch point, never again KYC.
Yeah, but then the regulators won't like that one.
I know, but
Zero
then,
KYC.
we're all in a process trying to boost up the economy, so maybe that will work. But good point. Anything else want to share?
Yeah, I mean, this is I was expecting this to be the hottest topic of the conversation, and obviously, this is the buzzword in the industry, and it has been for several years. So I kind of have maybe two takes on it. I think the success of perpetual KYC will really depend on your individual institution and whether or not you actually have the right client base, the right footprint internationally, where you're even allowed to do this by local law. Certainly, many countries are not very prescriptive in terms of frequency of periodic review or what that periodic review actually looks like. And so you could potentially kind of match up the expectations to some type of a perpetual process, which is a low client touch, reliance on vendors, reliance on triggers based on your internal profile of the client. To the extent that you have that kind of client base where there is a availability of public information, I think it's absolutely something you should explore. I mean, this is probably the most disruptive part of the industry in the last several years. And again, the emergence of availability of data is what's driving it. But technology obviously is key to making this happen. So yeah, we absolutely are looking at that, and I think a lot of other firms are.
What do you think will be some of the type of the firms that will be most behind on that because of the limitations? Challenges.
The largest, most complex firms.
The size matters.
The largest, the biggest, most largest global footprints, most diverse client base, whether it's retail, institutional, banks, corporates, trusts, personal entities, private entities. The larger, the more public, the more regulated, the more information there is out there. The less of that, the more confidential, more difficult it is to source this information. And then how do you prove to your regulator that you actually are keeping your client risk profile up to date? I think the way you sort of counter that is by having really strong controls internally for looking at client activity and detecting that when the risk actually occurs, that you're reacting to it real time. That's really, I think, what would probably be the selling point to regulators is having strong monitoring and trigger controls that will detect activity that looks suspicious.
And you mentioned the activity, right? We all have some level of review where we do we compare what we expect activity to be to what the actual activity is. And I think this is one of the places that technology can really enhance things, right? We all have traditionally relied on transaction monitoring systems where you've got a static set of rules, and those rules generate alerts, and you're applying those same sets of rules to a vast array of customers, whether it's retail, institutional, things like that. Whereas now, as technology is evolving, you can apply, the technology has the ability to learn about your customer. So rather than applying this same set of static rules, you can have your technology learn about your customer and better identify what is potentially suspicious rather than this predefined set of rules. And I think that's one of the biggest things that regulators will start to expect is when you're doing your activity review, are you really utilizing the customer profile and the unique risks that this particular customer presents rather than just an old static, bunch of rules.
Yeah. One of the challenge what I see is the moment we start, as Sabrina mentioned, we go back and talk to the business about a perpetual. they're going, oh my God, this thing. So it's more important for us, it's like a need-based or an event-driven. I mean, it is not a perpetual, in the every day we are doing it. It is a material event happens, we do the KYC. And any organization that has a matured KYC process should be doing that one. So that it's an education, like how you educate your business team and say that the technology change for the last 2 decades, if you look into, there are a lot more information is available and a lot more services available. How do we leverage that to make this less painful, both the customer and the business, right? So that is where we need to go.
Excellent point. I think that you mentioned everyone internally is pulling their hair out. We really need to be depending on technology. Vendors coming even together to really make an excellent perpetual KYC solution. I don't think it's going to be one vendor that's going to come out and do it. I think even us partnering with different banks, partnering even with regulators themselves to develop something they're proud of, I think that's the way we're able to achieve this, where everyone's on board, everyone's excited, and we actually taking the heavy lifting off of the internal staff.
And one of the things I think we're lacking on in the in like the brokerage or lending spaces, we spoke about this earlier, right? If you think about the fraud side of monitoring, if you do a transaction in a location that, is different, you'll get a text message, a phone call, something like that. So on the fraud side, banks have been very proactive about using this individualized knowledge of their customer. But on the broker-dealer side, or on the other sides of banks, I think it's been lacking, and that's something that I think we can start to learn from the fraud side of things and apply to the AML side.
The only thing we probably don't want to replicate is to notify a customer you've been getting vulnerability, because you don't want to tell them you have the money laundering concern, because that's always something we are hide deepest. So if someone has a lot of my friends, they come to me, say their accounts got closed. But I trust them fully that I don't think they have anything to do with money laundering, but I just kind of showing how much more secretive on the money laundering side is that when they close your account, it's not something they would proactively communicate to you that something suspicious is happening. It's usually given no reason. All right, and go ahead, Stephen.
No, I definitely agree with what Mike said. I think to your point, of course, this is to me there's a fine line between a change in activity and activity that is absolutely indicative of something that looks suspicious, flat out suspicious and concerning. And so obviously those that are in investigation capacity, alert analysis, that's often a fine line to determine when to file a SAR, when not to. But being able to react to those real-time alerts and integrate that into your KYC process, I think is important. It's also something I think, just kind of looking at US legislation, the CDD rule, aside from requiring ownership, there is that expectation of constantly reacting to change in activity and how that integrates or relates to your client profile. So again, those types of things that could just be indicative of a change in your behavior and how that may impact what you know about the customer is really where I think you can kind of shift your scheduled review process every 5 years to a real-time reactive process to when something happens, that's when you check. And many clients, and hopefully most often, more clients are not really kind of changing their activity, depending on the account, of course, and the relationship, but it's a stable account, same type of activity going in and out, that isn't indicative of any kind of continuous risk. Conducting a scheduled review of that relationship may provide less benefit than would be from something that actually fluctuates in activity. So it really is, I think it's a key attribute, but you look for what is an anomaly versus really what's an actual alert that's concerning. So.
Totally. We don't want to define what should be the alert, but let whatever the customer itself really define it. So before we go to Q&A, I will let my panel have an opportunity to dream. Assume we don't have any constraint, money-wise, resource-wise, technology-wise. Of course, regulations still apply, otherwise this whole compliance doesn't make sense. What's your most ideal state of the future of KYC, onboarding, all of that?
I'll take this one. I've spoken enough about global KYC, that's definitely one. But two, getting to a point where we can have instant KYC, don't know how that's going to happen, but instant KYC where when a new regulation is implemented, we're easily able to apply that rule base to our current systems. That would be a massive dream versus going through the headaches, as you've mentioned, having to change your systems. But then secondly, having a user or entity or merchant be able to instantly verify themselves and really go towards a place where it's not as strenuous and users are more so excited about KYC and less looking at it as a nuisance, which I currently think is the narrative on KYC.
Thank you. So instant is the key here. You gentlemen's dreams?
So I guess what I would say is the ability to have a KYC system that is integrated into the entire AML program, kind of as I spoke about earlier, and a key to that obviously would be technology. And as I said, kind of utilizing some of the ideas that we see, whether it's the fraud space or some other spaces, and applying them, to our AML space. And again, it wouldn't necessarily be about alerting the customer, but just being able to generate alerts off of real-time activity and a profile of that specific customer, rather than the way we're doing it now at periodic review. We take a look back and just look at some activity that happened a year ago. Just being able to really integrate that more into the real-time stuff, as Stacy mentioned.
Thank you.
I mean, you took what I was going to say, regulations to be consistent, but you took that off the table. But so I think I agree with everyone on up here. I mean, I think the process, reliance or integration of information across the firm is key. I think being able to react to change real time is really important as well. Yeah. Having a platform that could do that would probably reduce a lot of the noise, the client experience noise, the pain that you encounter by constant shifts in expectations that may arise either by reg changes or due to just risk appetite, and things that become an emerging factor or a concern that we now have to sort of, look across our universe of population of clients and determine, whether or not they meet that criteria for those risks. So having all that availability, all that information in hand, information that hopefully can be sourced without a lot of touch points to the client and refreshed perpetually, that would go a long way, I think, to getting it to the right place.
Yeah, and I didn't specifically mention this, but the ability to reach across your whole organization, right? And we're trying to work towards that concept of having the global, onboarding process, but we struggle with it, and that would be something that like I said, when I go to sleep and dream about KYC. That would be something that I thought I was the only one that dreamt about KYC.
Me and you both. Me and you both.
No, that would be
hope
something
none
we'd
of
like
us
to
do dream about a KYC at night, but we can dream of here. Krishna, what's your dream?
If my dream is to build a global, highly integrated solution, beyond the AML world, am I right? I want to have a system that can do a multi-product, multi-customer type, and integrated with doc management system, like a transaction monitoring system, gift and entertainment, all the system integrated. At the same time, I don't want to build everything. The technology changed, so buy what I can. So I want to build that as a hub and spoke model. The hub, I will build it, and that is a global solution, but it can be customized locally, because without that, it is not going to this one. So if there is an appetite in the organization for that, I guess not.
Very nice.
Well, this is our dream world, so there is
that's a dream world.
So you have unlimited budget.
Yeah.
Similarly, I do think that we talk a lot about all the restrictions from each of the local rules, especially for a city with such a huge global footprint, and a lot of times even FRB or OCC are happy with us. Maybe a Romanian regulator or Argentina regulator is going to chase after us, not to mention the Asian regulators. Asian regulators are even more hardcore. So I honestly was hoping that that whatever, for Citi, I think, whatever the KYC, the future we develop will be able to